Cathie Wood of ARK Invest was interviewed right after Tesla's earnings call. Today, we'll listen to her thoughts on how the big whale investors are now changing their tune. Auto analysts are now realizing their take on Tesla has been wrong and now face the prospect of modeling in autonomous ride-hailing. She says she sees Tesla will get to a $15,000 car in the next few years. And Cathie stands by her forecast and is still expecting Tesla stock hitting $2,600 in 4 years. She says one of her highest convictions in the AI space is Tesla. It's the biggest AI project on earth. That's a number of very big statements. Larry Goldberg is joining us today, and he's going to listen in and give his reaction to what Cathie's been saying these days, just the last few days. Welcome, Larry.
Thanks, Herbert. Great to be here.
So this is fun. It's Cathie, ARK Invest. A lot of people obviously love her in a sense that they've done fantastic research on autonomy, and yet there's others who think that they're too crazy, too far out, and yet it's turning out now that she's going to be right. Nothing that they heard so far with the plans. It's actually all in line with what they've been saying. So let's listen to the first question here and her answer to it.
Hey, Cathie. It was great to meet you and the ARK team at the robotaxi unveiling.
Yes. Thank you, sir.
Yeah. So in regards to Tesla, in the last few months, I feel like there's been a narrative shift on Wall Street's part away from vehicle deliveries to sort of now more focusing on FSD, AI, and to a lesser degree, maybe Optimus. And you obviously talk to a lot of Wall Street types. In your experience and discussions, do you find that Wall Street has sort of finally woken up to the long-term potential of Tesla's FSD and the incredible progress that they made in the last 9 months? Or do you sort of feel like they still have their heads in the sand?
I think what's happened very recently is auto analysts, and I think the coverage still is predominantly auto analysts. We're getting more and more tech analysts in, and those are the right analysts, either robotics analysts or AI analysts or energy storage analysts, all of those. I think what's happened is auto analysts have said, okay, this resembles nothing else that I am following, which has been true all along, by the way. They just thought they understood electric and autonomous. And of course, they don't. They're expert at the internal combustion engine. So I think there's a little bit of like, oh my gosh, I've been pretty wrong on this. There are some people who are stalwart there still, which is kind of unbelievable. And now they have to face the prospect of modeling in autonomous. And I know I'm a little hamstrung here, but I know that Tesla started out after the report down 5% plus. And I don't know if it's still up 4% plus. But I do believe, the idea that Elon reinforced that Tesla will be scaling the Cybercab in 26 means production has to start this year. And I think the work we're doing in our Big Ideas deck will be out next week. And in it, you'll see, we can see Tesla getting down to, in the next few years, a $15,000, I should say this is a 5-year forecast, so $15,000 car. Again, this is nothing that traditional auto analysts can relate to. They've only seen their prices going up, the prices of the autos they follow going up, especially with more and more regulations over time. And they're not enjoying the cost declines associated with new technologies. So I think, and I hope we have put out our autonomous model and our 5-year model. We did that close to mid-year last year, and we stand by it. I hope more and more people are looking at it. They can look at it and test. And if they don't like our assumptions, I think there are 40 variables we allow people to change and see how the price target changes from our 2,600. So I think more and more people are starting to experiment with it. And there are some analysts out there, more on the tech side, who really do understand. And I think they are gaining more traction. I think the broadcasters, CNBC and others, are inviting them on more. And again, this is increasing the efficiency of the stock price.
Okay. What do you think, Larry?
Yeah, she's right. I mean, ARK has been quite precipitous or quite the, driver of this whole move of the analyst community to start, looking at autonomy. And we've spoken about this in the past. So she's absolutely right. Now, the ARK analysis is extremely good because it does, probabilistic analysis of what could happen with autonomy and with ride hail, with the cybercab, and that probabilistic analysis allows you to vary many of those parameters. But when you look at their numbers, and I go back with ARK back to 2018, 2017 when I started following them, and they predicted the stock price of Tesla at that time to be this, incredible number that nobody thought would ever be possible of $6,000. Well, it hit $6,000. They had this 15 times split, but it hit the number $6,000, which is $400 post split. And so they've been right on the mark the first time around, and I believe, and that was based upon the car. Now they're doing this analysis based upon full self-driving, and based upon the accuracy of what they've achieved in the past, based upon their track record, I think they're right. And look, full self-driving is coming this year. I'm convinced of it because I've been experiencing it, and I've been driving it, and I've been driving a huge number of miles. I've traveled the country backwards and forwards with FSD over the last 2 years, and I see what's happened to it. And so I think they're exactly right in their timing and their estimates. But you can go to their model and you can vary different parameters to see what the stock price will be based upon change of those parameters. But their target, I think, is reasonable. I think it's there's a very high probability of success, and they're talking about $2,600. And so I'm basing my calculus on them being more right than wrong.
Yeah, $2,600 in 4 years. It's currently $400 right now. Only just autonomy. They have not yet added bots themselves. They're working on it, and but they've been right. I mean, like just last year, just the conversation we get from people is like, autonomy will never happen. Never. Don't you know? There's like 9 nines it has to hit. Don't you know that if somebody gets hurt, the regulatory approval will never happen. And
somebody will be hurt, somebody will die.
Yep.
But a hell of a lot less people will be hurt, and a hell of a lot less people will die than would happen in the alternative.
Yeah.
But I think she's much more right than wrong. In fact, I think that the 6.5x she's looking up from this point to where they're going to get, I think is very, very conservative. This is not investment advice. Don't take my word for it. Do your own research. But I think there's a very high probability of success here. Very high probability.
Okay. And so just before we move on, what you're thinking about her comment about these, it's basically auto analysts that's been following Tesla. And now it's turned into, right, for many, many years, us retail analysts, retail investors kept saying, it's not just a car company, not just a car company. Well, now we know that almost all of them have realized that it's not just a car company. That's done.
Yeah, and the problem is it's not only an issue of what kind of analyst they are, because you could have, a tech analyst as well. But the problem is it's a Wall Street analyst.
Gotcha.
It's an analyst that has to look at actual numbers that they can justify and they can argue. It's extremely difficult to forecast numbers for a product that doesn't yet exist in the marketplace.
Yeah.
That's to have a company in the public, as a public company listed on the stock exchange that's manufacturing a product that doesn't yet exist, whether it's, full self-driving. It used to be electric cars. Now it's full self-driving, and it's, humanoid robot, Optimus. You're looking at 2 products, each of which could be the biggest product ever made in the world.
Yes.
In history. and you're looking at those two, other than maybe oil, and you're looking at those two, and maybe even greater than oil, and you're looking at those two products, and you're trying to project what's going to happen to one company. This is not how Wall Street analysts were born or brought up or matured. This is out of their league entirely.
You said something in the last show we did that I want to bring up again because I thought it was very good. You said that so there are Wall Street analysts who follow companies and they try to see how much growth that company is going to have. But typically it's venture capitalists who invest in startups, and those startups are the ones that are about to create a product that didn't exist before, enter into a new market. Maybe they're thinking they're going to disrupt this market or something like that. It's a new technology. It's hard to know. The weird thing about Tesla is actually it's a startup, but it's so well funded and it's led by the best entrepreneur in the world. And they've proven already in the past, but like they're so well funded that the financials for Tesla is so incredible, with now $36 billion of cash in hand. They have so much money. They have all the right talent, but they act like a startup. And so it's like this weird, right? Can you talk about that?
Like a startup, yeah. Herbert, you're right in all your analysis, except they don't act like one startup.
Yeah.
They're a group of startups.
Right. Yeah.
And even in their established business, that is auto manufacturing, they've got several new evolutions within that. Look, the Cybercab is going to be built the way no other car on earth is built.
Yeah.
And it's going to be built, we had an argument on the channel, I guess it was last night. I think that they're going to do a composite body. In fact, I'm certain they're going to do a composite body. And, Brian thought that they hadn't finalized on that, but I'm pretty sure they have. They're going to do an unbox process. Cathie talked about a $15,000 car. Well, there it is. Yeah. You'd build a car like that and you change the world.
Yeah.
So you're not only building, a car without a steering wheel and without controls. You're not only building a car that, has autonomy built in and is really an electronic thing, but you're also building a car that's the way it's never been built before. Yeah. It's got four wheels and it's got a body and it's got two seats. But other than that, it bears no resemblance to anything that's ever been built before. So when you talk about startup, it's not one startup, it's multiple startups, and it's being run by the startup genius of the world.
Yeah. So love it. I love that.
What could be better? If you want to put money into venture capital, look, I put money into venture capital, but I keep on thinking every time I fund a company, I think to myself, why didn't I just put this money into Tesla? It's such a hard thing to actually help. I mean, I get very attracted to some of these founders, these brilliant young people, but my God, from a financial point of view, it makes no sense at all.
Right.
None.
Much bigger risk versus this is actually lower risk. But so you have to think of Tesla as a startup. Okay, so are people now
an extraordinarily well-funded startup?
So you got the move from the auto analysts now switching to tech, as she mentioned it, technology analysts. Now they're realizing it's no longer an auto company. Is it an AI company? So I'm going to play this next part that she was interviewed and she answered it. I'm not going to play the whole thing because she started talking about other AIs and the LLM and those kind of issues. Very interesting, but not for the show, this particular show. Let's listen into this.
Thanks for being here, Cathie. Great to talk to you. I was just wondering, with a lot of the conversation recently about generative AI and sort of the commoditization of LLMs, how you really view generative AI as a business versus the sort of real world AI Tesla is doing. Do you think it is defensible long term, or is it sort of destined to be commoditized, much like what we've seen in the LLM space?
Well, it's a great question. Our highest conviction AI names are, as you say, Tesla is the biggest AI project on earth, one of our highest conviction names. I would say if we're looking at other AI, and I am talking about generative AI applications here, we think the most profound applications are in the healthcare space.
Yeah, so she's going to move on talking about that. So yeah, but she started off by saying the biggest AI project in the world is Tesla. Do you think that there's been a change in investors' view of Tesla? Now they're thinking that they're an AI company because AI is such a big topic, all the Mag 7s, everybody's realizing this is a real deal thing. They're investing money in AI. And then for last year, we just kept saying as retail investors, oh, Tesla's an AI company, but nobody believes us. Do you think that that's changed?
I'm gonna raise a kind of weird simile or weird parallel. I survived the great crash of the dot-com bust.
I did too. 2000.
My highest conviction was Amazon.
Yeah.
And I kind of put all in. I went all in on Amazon, and then I had my own company. I'd sold it in June of '99, which was quite well timed. And by mid 2000, Amazon had cratered to a fraction of its cost, of its value. And I just added. I just kept adding. And the rest is history for me. But it took 13 years, 14 years. And a lot of people don't have that kind of patience. I had that patience. I lived with it. In a way, I never thought I'd see the same opportunity in a lifetime. And I don't think I'll see another opportunity like this in a lifetime. And when I say like this, I'm talking about all of Elon's companies.
Mm-hmm.
I mean, I hope he really lives to go to Mars. I hope he lives to see the Mars project complete. But getting back to our subject, I think this is the greatest AI project on Earth. Yeah, I know that Sam Altman and co are spending $500 billion. That's $500 billion. That's more than the budget of most countries except for 2 or 3 on Earth. But I don't think that's a very good expenditure of money. I think that breaks all the rules that Elon sets in terms of capital management and conserving capital and so on and so forth. So my money is on Elon. And if the stock goes back down to 200, I will double up again.
So do you think that the investors, different kind of institutional, are they recognizing that this is happening?
Some are. There are without doubt institutions, but they've been there. There have been a lot of institutions that have been Tesla investors and are still Tesla investors. I mean, strangely enough, the Norwegian sovereign fund invested in Tesla, did not vote for Elon, and yet have re-upped on their investment and remain, committed to Tesla. So there's this strange political play going on. Elon's not quite, acceptable to the powers that were in the political world, but there are those institutions that have stayed with him, but they're not few and far between. By and large, the institutional investors do not yet understand Tesla. And by the way, it's exactly what happened to Amazon.
Exactly. Yeah. So, ARK, if Cathie's correct, and we get to $2,600, the stock price, that is an $8 trillion valuation for Tesla. So,
low.
Yeah.
That's low.
That's, I think, what it is, though. Am I wrong?
Yeah, I mean, I'm just thinking 2,600 is a very conservative view, in my judgment.
Well, okay, but that's what we're talking Cathie Wood, right?
Okay.
Cathie Wood. Again, autonomy only. She didn't put any bots in.
Yeah, but if you look at her analysis, you'll see 2,600 is that mid number. It goes very much higher, and it also does go very much lower.
Right. Okay. I'm just saying that's $8 trillion in the market cap. Now, this is what Elon said, right? Let me see if I got this right.
25 really is a pivotal year for Tesla. And when people look back on 2025 and the launch of unsupervised full self-driving, true real world AI that actually works, I think they may regard it as the biggest year in Tesla history, maybe even bigger than our first car, the Roadster, or the Model S, or the Model 3 or Model Y. In fact, I think it probably will be viewed 25 as maybe the most important year in Tesla's history.
Okay. But I think what I missed it, but what I was trying to get to was when he said, I believe Tesla will be several times more than the top 5 companies combined. There's a path to that. And that's if you have autonomous vehicles and autonomous robots. So 5 companies, top 5 companies combined, that's way over $20-30 trillion.
Well, I don't know. Yeah, maybe. Look, I'm not going to sit here and predict a number. I mean, a 6.5x return for my modest needs is sufficient. I mean, there is such upside in the stock. Now, should you be all in on the stock with all your net worth? That's not the way I would play it, and it's not the way I'm playing it. I mean, I'm heavily invested in Tesla. It's by far my biggest investment. Well, Musk Inc. is by far my biggest investment. But, one has to be sensible. Things happen. The most incredible things happen. World War can happen. Something can happen to Elon, God forbid. And all of these things should weigh in how you go about investing.
Okay. So, if things go right, which lots of things can go wrong, and even Elon did say, right, that, the bots variable, we're building the train, but at the same time, we're building the tracks and the station at the same time. So lots of variables that can happen. But at least production, here's the product. Production design 1 is coming out this year. Production design 2 next year. That's his plan. So, but they've got a product. When do you think analysts or other investors will say, hey, it's an actual product? Robot is a product. So if they sell it thousands, but it's this year to only Tesla, that's not a product. They're not selling it to customers. They sell it to customers.
Gary Black will not put it in his
So there's like
analysis.
10,000 robots sitting in Tesla's factories. Not a product. Got to prove it. And then next year,
if there's a couple of thousand, it'll be a lot. That's my view. But we've had this conversation before.
Yeah. But, like next year, that's when they sell it to customers, So, very interesting. Thank you very much. So that's Cathie Wood, very bullish on Tesla and still, saying the right things. And of course, it's her analysis on robotaxi, at least, looks like, or Tesla's ride-hailing program seems like it's taking shape. And she's still pretty bullish about that. Any last comments about what you saw there today?
Yeah, Cathie is the only one who's done the analysis, who's done the homework of all these companies. And so I think that the 400 to 600 analysis by the Wall Street analysts will catch up to her later in the year, and we'll see a revision upward during the course of this year once Austin goes live with the Cybercab.
Exactly, which is hopefully June. That's what they said. So we'll see. Actually, what I listened to what he said again, and he actually said the team is confident. That tells me that we're confident. That's what he said. Not that I am saying it's going to happen here. He said the team told me.
Yeah.
That was very interesting. Thank you, Larry. Follow Larry on his X account at Tesla Larry. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.